Hey traders, Brent crude just spiked 7.5% overnight to $102. Gift Nifty is gapping down by 340 points to 23,756. Asia is red across the board and FIs are sitting on 2,86,000 short contracts, the highest we have seen in recent times. Happy expiry Monday. So this is India's pre-market edge, actionable data, zero bluff. I am Tanmay Kurtagoti, Season 2, Episode 18. It's Monday, the 13th of April. Nifty Expiry, let's go. So, Brent crude just blew through $100. It was trading around $94 on Friday. Right now, it's trading at $102, up almost 7.5% in a single session. WTI is up by 9% and is trading around $105. The Hormuz situation clearly worsened over the weekend. This is the main gap down catalyst for today morning, but along with that, Dow futures are down by 0.72% in the pre-market opening from Friday's close. Nikkei is down by 0.9%, Hang Seng is down by 1%, Kospi is down by 1.2%. Asia is uniformly red. And gold is at 47.22, actually down by 0.6%. Some profit taking has happened over there as well. So dollar index is trading at 99.02, and here's something interesting you want to know. So it was at 100.20 on Friday. Dollar actually weakened despite the risk off. That tells you this isn't a broad panic, it's just a crude specific repricing that we are seeing in. And the bigger number, Gift Nifty is at 23,756, down 335 points from Friday's close. That's a 1.4% gap down. Opened at 23,900 today morning and has already slipped to an intraday low of 23,735. This is crude shock repricing that is happening over here. Now here's where it gets interesting. Let me walk you through Friday's positioning because that's what going to drive today's position at open. So let's talk about some build-ups. So if pro traders were flat, they had just 91 contracts. So basically neutral on the future side. They were holding long puts and they are holding long calls. So both are long and hedged. So pro isn't making a directional bet over here. FIs on Friday added 58,000 short contracts in the futures in a single session. That took their net positions to 2,86,000 short, the highest short position we have seen in the recent times. Not even during the March lows were they this short. Okay, but here's the paradox. The same FIs were net cash buyers at 672 crores on Friday. First time in weeks they have bought in the cash market. So they bought puts, long puts, which they have around 3,30,000 contracts, sold calls, which they have around 1,78,000 contracts. This isn't panic selling. This is a full institutional hedge book. Short the index as an overlay, but the equities underneath, it's a collar strategy. You should understand this. And now with crude spiking 7.5% this morning and Gift Nifty down 335 points, those short futures are printing beautifully this morning for FIs. The question is, do they take profits today or cover, or they hold through the holiday that is going to be tomorrow? So tomorrow is going to be an holiday. Now the clients, and this is where the pain is. Clients were maximum bullish on Friday. They had 1,43,000 long futures. Short, they had 4,89,000 puts. Okay, so they are long futures. They are huge amount of short puts. They were selling insurances to FIs, and along with that, they have 1,26,000 of long calls as well. All of that is underwater and is in pain this morning. When the crowd goes all in and gets hit with a crude shock, that's force unwinding that we are going to see in the first hour of trade today morning. But here's what nobody is telling you about today's option setup. The GEX picture. The gamma flip zone is sitting right around that 24,000 mark, exactly where Nifty closed on Friday. With Gift Nifty at 23,750, we are opening about 300 points below the flip. That means that we start the day in negative gamma territory. Market makers are short gamma, they amplify market moves, so expect an aggressive volatile open that is going to happen. But here's what matters on today's expiry. The 24,000 strike has a massive 53 lakh total OI present. Put OI alone stands at 67 lakh contracts. That's the gravitational magnet. About 2450, the GEX turns positive. 24,200 is your call wall, with GEX at positive 2776, and those are the resistance zones. You are not going to break those today. Just as a level, I'm telling it. Friday's Straddle traded at 283. That gives us a one standard deviation range of roughly 23,650 on the bottom side, and on the upside roughly around 24,350. GIFT Nifty at 23,750 is within that one standard range barely, but hitting that bottom is extremely high. But if VIX spikes around 10 to 15% on open, I expect the realized range to widen much more. So key levels to watch for today: 23,700 is the GEX support. Below that, moves accelerate much more, and we could see 650 getting hit easily and breaking through that. The upside around 24,000 is the expiry pin that is expected as of Friday's close. 24,200 is the first resistance that we could see. Below 23,650, and you have broken the one standard deviation floor, and that's where the real trouble starts, and that is where I think panic is going to set in today morning. So let's see what the sectors are telling us and what they are doing. So IV was at 17.08 on Friday, so it is in the negative zone. With the morning crude shock and gap down, IV is going to spike, and this is one day of fresh volatility event what we see. So don't sell premiums at open. Let VIX settle down. Let the first 30-35 minutes play out. If VIX starts cooling off that spike, then you sell. Sector wise, energy and metals have been leading. With crude breaking $100 again, energy names gets a fresh tailwind, but it's a double-edged sword for Indian IT, which was showing some strength after TCS monster quarters, but we are seeing some TCS bad news hitting the markets as well. So that's the rotation we are going to see. Banking will likely take a hit in today's gap down. Watch if Bank Nifty holds those 54,000 levels or not. So today is also RupeeCase Nifty's rebalancing day, and that brings me to the education point, how systematic rebalancing actually works. So every 2 weeks, the RupeeCase Nifty strategy rescores all the 50 stocks on momentum. The top 10 get equal weighted. No opinions. No, I feel bullish on the name, pure data. If a stock's momentum fades, it exits. If a new name accelerates, it enters. That is the reason we are seeing some good names getting entered, and there is a metal stock which is entering, there is a IT stock which is entering, and there are some pharma names which are exiting as well. Okay, so a systematic strategy doesn't wait, it executes, and that's exactly why it generates alpha over the benchmark. Now here's my read for the day. So this is an expiry day gap down into a negative gamma with a crude shock as a catalyst. VIX will spike in the first 30 to 60 minutes. Expect aggressive moves. Could test easily 23,650 if the panic sets in. But after that, the key point is expiry day and the massive OI built up that is going to happen at different strikes. So the 24,000 strike right now acts as a magnet. I expect the market to find a low in the first 1 or 2 hours, and then going back towards that 800-900 zone by close. The day should end negative, probably in the 0.5 to 1% range from Friday. But this is a buy on dips on a weekly basis. So today's dip is the entry. Don't chase the panic. Wait for mean reversion to happen, and let's see what is happening. So track the rebalancing live on RupeeCase.com. See exactly what enters and exits the today's portfolio as well. So that's your edge for today, guys. If this added value, share it with one trader friend who needs it right now. Subscribe on Apple Podcasts, Spotify, or stream it live on RupeeCase.com. I'm building RupeeCase, India's systematic investing terminal. Link is present in the show notes you just got earlier. See you all once again on Wednesday, that is 15th.